Hi folks, and welcome to another day with Serene Education, looking at the 4 majors for the 28th of March 2012. Hi guys, let's have a look and see what's been happening at the market, what we had yesterday. Okay, here's a daily chart. Upside movement, so you can quite clearly see that we've had extensions to the upside. I just want to get a fairly grip. Okay, so we take the high point just recently, a fib retracement. Okay, I've got my fib pullbacks here. And yet again, I've got another one from the bottom here to the top. So let's put these in. Okay, so you can quite clearly see we start seeing areas where we see a lot of hesitation, where the pivot points or these fib lines start to form a congestion area. And you can see where price has actually found a nice support above this area here. A lot of congestion, and then also through this, just previously, you can see quite clearly these fib lines have actually pulled together. They're quite close, so you can see how close price has been moving through those areas there. Now we've breached all of this. There's clear momentum to the upside now. We are seeing a pullback now after those breakouts we saw of 1300, and particularly for the Euro-US dollar. Sorry, the Euro-US dollar. Apologies. Here at this range over here. So now all we need to see is price. You can see quite clearly is pulling back to that level, the prior breakout, which is the 13,300 mark. So must make that, it needs to stand out. You can quite clearly see a lot of hesitation in this area here. There's bandwidth. So now if price can actually find support here now, then we could definitely see a reattempt back up towards the 13,400 mark quite soon. So pull back in play. This happens 98% of the time in any breakout. So don't feel like you've missed the move here. Just wait for the pullback here at 61.8. This is the first extension, the pullback, and then the continuation, 100%, just above, just missed it, just above. We'll probably go back up there again quite soon if we can maintain this movement to the upside. CTC is still blue, great, so everything's in our favor, bar the institution moving average, which is still above price, because we're still very much in a downside trend. You can see that these highs over here, for example, if I just take the tops of here, the wicks, there we go, from here to there. Let me just get this right, so important. Okay, you can see the major trend line is still a way away. I'll just do that. There we go. So if anything, trend line is still back here at 13,400-ish, back to the prior high that we saw back in early February. So still a bit of momentum to the upside. As it stands now, we could see price just pulling back to the 13,300. The breakout area, finding support, and then a continuation to the upside. So look for a bounce here, look for an entry bounce, and first protocol will be roughly around the 100% extension of this, or the prior high, 1345. In between 13,400 and 13,4500 would be your first target for this pair. For our chart, you can see all the moving averages below price. Now we have everything in order: 20, 50, and the institution moving average. Blue across the board, higher swings depicting upside movement. We have the breakout, we have the pullback now in play. If you take the low of this candle to the breakout to the high over here, for example, you can see that 23.6 is in play as we speak. 38.2 would take us back to the 13,300, which is our support, a very strong support intraday or daily range. So mark that nice and thick. So you can genuinely see that we are trading above a very, very important support and resistance level. Where as long as price stays above this level, then we should be looking for potential upside movement to favor for the foreseeable future. So all we want to see is a nice bounce over here now at this level, and then we can look for potential upside to capitalize on the upside of this. Hourly charts, see price is still above the 50 period percent line on our RSI. Dictating upside, still strong upside trend. Pullback in play as we speak. We can just put in the 13,300 as a very strong support and resistance daily, so we need to put that in inside on our smaller time frames, so we can see where price is trading as at these times of support and resistance. You can see we're trading on the upper side of that range. So now we just need to find prior resistance becoming a new support, and then price will take care of that. So notice, however, on the Asian session, not a lot of movements. This is the low of the Asian session above the 13,300. So now if we can look at that, if price can maintain those levels above the Asian low, then we could see price momentum actually building on that. You can see lower swings depicting downside movement, and just recently we're starting to see more consolidated to the upside. By this little breakout, more touches. There we go. So we want a nice bullish engulfing here. If price can stay above, you can see there's a bit of a support now on RSI, not going any lower, and price is going sideways to confirm that. Now we're just in a bullish up candle here on the hourly to confirm that we should be looking for further upside movement for build up for the remainder of the day and for the remainder of the week, as we start finding price finding support here above 13,300. So blue candle as we speak now on this time frame. We just need a blue bar and the CTC to go blue, and that will confirm that we should be looking for upside momentum as we build a nice support above a prior resistance. Straight into sterling, good old cable. Let's see what's happening. Okay, weekly you can quite clearly see we're getting into the squeeze pattern now, testing the 50 and the institution moving average on our weekly time frame. So now really getting in the mix now. Notice however that price has pulled back to the underside of 50. Is that confirming now that the ceiling level is definitely being targeted or reached, and are we going to see price rolling over 1600? Very strong area of resistance. The 15900 was also a very particular strong one, because we went in this range over here. You can see quite clearly price traded through it, however it didn't close at any one stage through the best part of 2 months. So now for the first time we're actually trading above 15900 and we're moving higher. We've actually kissed 1600, which happens to be the institutional, and the 50 period moving average still there, acting as a ceiling level. So what does it mean? Well, we could definitely see yesterday's candle, definitely a shooting star at a ceiling level. What we could potentially be seeing now is price actually running out of steam at a very strong ceiling level, the 1600, because of the institution, 61.8 area being reached, and we're seeing price moving lower. So we could see potentially price moving lower during the course of the next couple of days. The only thing that's going to cancel that out is for price to be trading above that area now. So we're now bullish engulfing candle, break above 1600 will cancel this negative sentiment candle at resistance, and what we could see is price targeting back to 15900, which was our prior support and resistance level just not too long ago. So let's put that in, because it's very, very important, because that could end up being our support level. So this is our major resistance, followed by our previous resistance and support. We could see price moving back towards these levels quite soon if we don't get a break above 1600. Move to the high of this candle. You can quite clearly see that 23.6 is in play as we speak on our daily. If price can maintain these levels above 23.6 here at the 159500, then we could see a nice bullish candle being formed and then cancelling out this negative candle as we make a reattempt at these highs. Failure, and we see a break and close lower than 159500 in the next couple of hours, would definitely confirm that we should be looking back towards 15900 potentially, as price pulls back after reattempting or failing to break above 1600, which long term is a very strong support and resistance level on the weekly, because we have our institution, our 50 period moving average above us, acting as a clear ceiling, a very strong ceiling level. Got to be trading above that in order to get any further upside movement. Notice higher swings, great, everything's pointing up. CTC still in our favor on our daily. However, now that we've broken above 15900, we've got the 1600, which happens to be a weekly very strong resistance level. So we're going to be trading between two potential consolidator points. Okay, we've got them both here. I'm going to put them both in black so you can quite clearly see. And this is now a trading range. Okay, and we fail here. You can quite clearly see yesterday's candle, very indecisive candle. We should see price pulling back because of that. At the moment now in the Asian sessions, still maintaining those highs. Not traded once below the close of yesterday's candle. In fact, there's a lot of buying through the Asian session going into the European session open. Still above the 23.6. The moment we get break below 1595 and a close lower on our smaller time frames, that will pretty much dictate that we should be looking back down here towards the 38.2 at the 1591, 91.50 mark as a potential pullback. And as long as it maintains above 15900 for this week, then all we're seeing is a pullback of a breakout, and then we'll see a real reattempt of 1600 quite soon. Next up is US dollar Swiss franc. Let's have a look and see what's happening. Okay, nice continuation to the downside over the past couple of days. Then yesterday we had a slight hesitation. So if you take the highs recently at the start of this downtrend to the low, to the up, and the low, you can see 61.8 clear support. At the moment now, price has bounced back up towards the 50. If we find that price is finding resistance here, quite clearly see a very small trading range on the daily, overnight. Asian session not giving a lot going into the European session open. Price could just continue to drop now if we find a clear ceiling level above us. 100% of this extension, the initial extension, would be our overall target for this pair. If you look at the trend, you can see that the trend line, the intermediate trend line, is gummeling to the downside here as momentum is favoring lower. CTC is in our favor. We have everything in our favor. Moving average 20 and 50 above price. The only one that we're looking towards or to use potentially as a yardstick or goal would be our institutional moving average below price here. But first port of call, if we get a break below the 61.8, would be 100% here above the 89.20 mark for this pair. Intraday, as long as price fails to break above this area here, right above us, a ceiling level at 9050, and potentially we just put that 9050 in, so we know that that's the 50% retracement. 9050, perfect. Okay, so that's our ceiling level intraday. Price fails to break higher than that. You quite clearly see on the 4 hour a lot of indecision under here, a lot of wicks. Price has failed to actually rally higher than that over the past number of hours. Each one of these candles is a 4 hour, so we've got 4, 8, 12, 16, 20, 24. There's a good 30-40 hours there of indecision under that 50% retracement line. So as it stands now, fairly here, nice bearish engulfing. CTC still in our favor. We have a blue candle. That's not to worry. That's just telling me we should see consolidation. Sure enough, we are seeing consolidation to the underside of this candle here. As long as it maintains below all the moving averages, you can see price is still trading above price. Apologies. And lower swings depicting price action. You can see here quite clearly. Oops. Let me just grab my trend line. There we go. Put that all in. You can see quite clearly price has failed on a number of occasions. Swing low, and now we're trading below this current resistance level here. So if you can find a nice bearish candle over here, then we should see a continuation lower, and ultimately the 61.8 will be the low of these candles there at 90.20 of this consolidation. So that'll be your first port of call, 90.20, back down to this hesitation here. If you want to be aggressive, look for bearish engulfing at the underside of this resistance level here, or you want to be passive, wait for a nice close below the 9020 for a look at potential target to the 100% on the daily, back down here towards the 89.20 mark, which I don't know if I can get on. 89.20, no, I won't be able to get on this chart. Yes, I might be, sorry, apologies. 89.20, which is roughly around here at the previous lows. Okay, so that's pretty much what we're looking for ideally. Failure here at the underside of this resistance level here, bearish engulfing, nice bearish engulfing. Look for an entry and then stop above this area here, back down towards this prior lows here as your first target. Last pair of the day is US dollar Japanese yen. Let's have a look. Still back into consolidation. Past couple of days or past couple of weeks, we've seen price pretty much failing at 8400. Price rolling over at this area here. A lot of indecision, spinning tops at a ceiling level. I just want to put this in so you guys can quite clearly see it. 8400. There we go. Quite ceiling level. Spinning top. Further exhaustion here. Another shooting star, bullish engulfing, bearish engulfing at the ceiling level, and prices reverted to the downside. We have a clear low to the high. I put that in. You can see 23.6 was a first port of call, and over the Asian session going to the European session open, you're seeing a bearish engulfing as you speak now, as price is failing to reattempt those highs. On this bounce is bullish engulfing here at support and bouncing higher. If this maintains and we see bearish engulfing today, it's going to tell us that price is still being dragged to the downside and this forming a lower swing. And then ultimately 23.6 will be retested. A break and close low, and that would definitely confirm that 38.2 here at 8100 would definitely be on for the foreseeable future as this momentum drags sideways. The one thing we could do is, as long as 23.6 acts as a support, then we can see a reattempt soon. But as it stands now, this bearish engulfing looking likely that we're going to see 23.6% as our first target if this maintains this level. Consolidation is still very, very positive though. We're trading sideways, bullet upside momentum, not a problem. As long as this 20 period moving average acts as support, we're still trading above all the moving averages, and there's a lot of M in between them, so it's still strong upside trend. However, if we break this price support here, then we're starting to look at further sentiment, negative sentiment creeping in, and we should be looking for further targets to the downside. These are marked out by our Fib retracement areas on our daily, so make a note of them intraday so we can see exactly what's been happening. For our chart, quite clearly see failure at 8400. You can put that in quite clearly here, 8400 failure, and price has reverted to the downside since then. Nice bounce, bounce higher, failing to broke above the 20 period moving average on this time frame, but failing at the 50 period moving average. An indecision candle followed by bearish engulfing at 50 has now seen price rolling over, and if I put that in the bottom, you can quite clearly see that happens to be a price support and resistance level through there. And now if it's trending the underside of that, it doesn't bode well for momentum, because you can see higher swings, swing high, now it's been breached. So ultimately it looks like price is going to revert back to the downside again, and if that's the case, then we should be looking at the 23.6 where we've been to before. Here at 82.20 is our first target, as we're still in this consolidation range. CTC is still blue because we're still above the institution moving average. So going to our hourly chart, our trigger chart, you can quite clearly see that we spend more time below the 50 line recently, and now we've had a bounce higher, and we had a failure here at the 200 period institution moving average. Before it was support, now you can quite clearly see that that support has now become resistance, as price has now gone from a very bullish stance, 8400 seeding level. Okay, you can quite clearly see there, 8400 seeding level. Previous reattempt of these highs here, much lower on the RSI indicator, and price has definitely fallen lower since then. You can quite clearly see just recently RSI has broken above it. We spent a bit of time testing that institution moving average, however not breaking and closing with a lot of momentum. Indecision on that breakout, yes, nice trading range up, however indecisiveness, and then price not taking the bait and moving high on that, and then we had a bearish engulfing sideways yet again at the underside of the institution moving average, and price has pretty much just fallen over the past couple of hours on the Asian session. You take the actual candle wick bodies of price, you can see the higher swing upside here have been breached just recently, failing to gain levels above it again, and the last hour or so we've seen some further selling taking place as we head lower. As it stands now, testing, just coming short of the support yesterday at 82.70. A break of that would clearly look for potential for further downside movement, and ultimately back down at 8200 would be our initial target, as we've been there before. And the CTC on this time frame, the hourly, is looking negative now, as we have everything in our favor. We're trading below the 50 period moving average again. It looks like we've kissed the underside, and now we're rallying down lower. So if you're looking for an entry in this, if you're not into this, look at a potential break below 82.70, stop above the 8300, and then first target down here at 8200 would be our first target. That's it, guys. I hope you have a fantastic trading day today. Please keep it simple in all your analysis. Just have a look and see if there's any news out today that might factor into the decisions on the market. We've got Sterling's current account, US dollar core durable goods orders month on month, which is an interesting one to see. And then we have GDP's final, we have Sterling's final GDP quarter-on-quarter figures. Expecting no change there. If it comes out even worse or higher, we could see price reacting on that. But as it stands now, please ensure that you understand what type of news announcements are out today, and see if they can actually make any difference in price. Other than that, just keep it simple. I'll see you first thing tomorrow morning. Take care. Trade serenely.